Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on August 8th. Ian Saunders, joined by Joseph Tizzolo. Taz, it's been a little bit more market movement as we kick off the month of August
Yeah.
than there was for pretty much all of July.
Yeah. Started off with a nice little pullback.
Nice little pullback. That's not that, yeah. I mean,
It wasn't,
it's not how it felt Friday.
yeah, but it wasn't, compared to April
Right,
and March, you count your blessings, right? So
right.
it wasn't too bad,
I
relatively
mean, we're
speaking.
recording this on Thursday afternoon. You had the S&P down like around 40
50.
bips at the
Yeah.
time of this recording. S&P was down around 2% on Friday, like for last Friday,
Mhm.
August 1st, was up 2% on Monday.
Yeah.
So obviously those don't net out because you lose and you can't, we weren't quite back there, but a little bit more action over the course of the past week or so. I mean, in July, we saw very, very low volatility throughout the
Hmm.
whole, kind of just a steady ascent higher. And you could see it on most of these underlying charts. I mean, when you see a point and figure chart that's just a vertical column of X's higher, that tells you nothing really happened. It just kept
Yeah.
going higher, right? You didn't
Yeah.
get any chop or back and forth. But we wanted to run through a few different maybe charts talking about vol, looking at five charts today. Some stuff looking at volatility, maybe looking at some stuff about some of the near-term participation back off we've seen.
Hmm.
And then look at the dollar, and then we'll throw in talk about Apple at some point as
Yeah.
well too.
Yeah.
But in looking at volatility, I mean, we saw on Friday's move lower, we saw the VIX spike 21%, just over 21% a day, which is relatively rare historically. I didn't feel like, I mean, 21% move in the VIX, it still ended below 21, right? It moved
Yeah.
from, what was it, 17 to 21.
Yeah. Where you start matters when you're talking about the VIX. But yeah, like
Absolutely.
it was a pretty big one day move.
It
Just
was
from the
just,
low vol environment we ran
yeah.
to we saw some volatility coming in
And
the
if you
market.
look at I think you looked before at the 1 point to the 2 point chart of the VIX. It barely got, if you look at a 2 point VIX chart
Yeah.
historically, we won't throw this up there, but it barely got a column reversal. I mean, it's even though it was such a big percentage move, it was so low that in any move was going to be a big percentage move at that
Yeah.
point, right? And when you look at forward returns, it's kind of relatively like normal market environment.
Hmm.
There's some big downs in there. There's some big ups in there moving forward. But it doesn't have to be a major move for
Hmm.
that, right?
Yeah.
And I think another interesting point to look toward when you look outside of the VIX, obviously the VIX can be pretty hard to explain. Um, we have another study that looks at the annual percent of 1% daily moves in the S&P 500. So basically how instead of looking at what level the VIX is at to project some level of forward volatility, it's like how many days did the market move around a lot?
Yeah.
Trailing, right? And it's just a way to contextualize volatility a little bit differently. We will throw that chart up on the screen. You look back at like 2022, 49% of days, almost half the year, saw at least a 1% move up or down
Yeah.
in the S&P. Um, Major down years tend to see more volatile days.
Mhm.
We're at 28% this year. Average historically is 26% annually.
Yeah. And you can attribute most of that to, you know, February, March, and April.
Yeah.
And then May too, and to the upside. But yeah, yeah. Other than that period, it's been fairly normal, if you want to, if you want to call it that. Um,
We saw no 1% days in July.
yeah, we didn't see any 1% days in July.
Right. We saw
And
one
then we
or
kicked
two,
off August and
saw two in May, one in June. We were at 40% of trading days at the end of April of a 1% move, which is relatively high
yeah,
historically.
yeah,
And so to get it, the point is that we saw that obviously a lot of a lot of volatile days around the Liberation Day.
yeah,
But that volatility has been kind of tapering lower
yeah, yeah.
as we've moved in, while continuing to climb higher. But I know when we've talked a lot about the S&P, a lot of the indicators kind of look toward the S&P, that in particular. But you're taking a look at a different picture of the S&P earlier this week.
Yeah, the equal weight, which, if you haven't heard before, is lagging the cap weight. I mean, that's been what's been going on the last 4 or 5 years for the most
Yeah.
part, other than 2022. Um, Now the S&P equal weight, it's an interesting picture because it went up and tested that prior high at 7,600. fell back down in August, gave a sell signal, its first sell signal since coming off the bottom in April. Yeah, it's still not like a bad looking chart by any means, but it's really the first sign that we've seen that kind of this upward thrust over the last few months has slowed down.
Hmm.
Um, just a change in character. If you're looking at that chart right now, you got support at 7,300, prior resistance magnitude support at 7,250. So I'm watching that area closely. If we do get below there, then you're kind of looking at, 70,50, which is uh, back to kind of like mid-May levels. Still not a huge concern,
But not
but
great to see if
it's
it.
not a great sign, obviously, especially when you look at like the cap weighted S&P 500 and it's just like big stem. It did reverse down into O's, but there's really not a lot of support nearby. You have a pretty narrow market going on, which all the worry with a narrow market is if the stuff that's really carrying the S&P higher starts to falter, then you get a little bit worried. There's nothing to lean back on.
Right, right. And I mean, it's interesting to look at this chart. It's relatively consistent in signal history.
Hmm.
It buy signals generally tend to lead to further buys. Sell signals have at least led to at least one other sell signal
Yeah,
over the course of the past couple of years. The only time that didn't work out was actually, interestingly enough, August of last year. Moved
yeah.
down, gave a sell signal, turned right back around and rattled off four consecutive buys. So maybe we'll get another end of the year like that. Although there's just a few other things going on at the end of 2024 than there is at the
Yeah, and that August 2024 was pretty crazy. I thought about
yeah.
doing like an anniversary piece
Hmm.
of it because it was just like, I mean, you had the VIX go from like 25 to 60 overnight, and then
Right,
by the end of the next day, it was down to 30 again.
right, right.
Um, and then the rest of the year, we just kind of just blew off and just kept moving higher after that. Um,
But even in looking at that, like that was a unique event, right? Yeah,
yeah, that
Eric
was,
unwinding was that time, right?
yes.
And that was a unique event in of itself. Tariffs, unique event
Yeah.
in and of themselves. I mean, the whole point being though is like if we did ultimately that downward move unwound quickly and was very fruitful for kind of put the market on a better posture for the end of the year.
Hmm.
We could see a similar, we got a massive rally. I mean, you're talking about this chart that moved from 6,100 in April all the way up to 7,600 by July. That's a
Yeah.
huge move.
Yeah, and there's going to be some air that needs to be taken out of
Right.
that just after such a big move. I think that the most interesting thing is that we went right back up to the prior high from the end of last year and then found resistance and fell back down.
Right.
Whether that materializes into something bigger, that's I wouldn't be betting on it necessarily unless we saw some further weakness.
Right.
Um, but it is interesting that that's kind of the area where we found some resistance. And then, if you transition into like looking into some indicators, give us a better peek underneath the surface. Some of the short-term stuff is kind of broken down a little bit recently, like the 10-week for the S&P 500. That was kind of bouncing around between 60 and 80% over the last few months. And then we enter August and we drop below 60 and we're now down to 50%. So we got about half the stocks in the S&P are trading above their 10-week or 50-day moving average. Again, not something that's overly concerning. On a short-term basis, I do think there's some things you could do. If you have stocks that have just run up a ton over the last couple of months that are in heavily robot territory, either consider trimming a little bit and rebalancing. You could sell calls against those positions if that's something that you implement in your practice. Other than that, there's not a ton to do here other than just kind of sit on your hands unless you really feel driven to do something.
Right. I mean, I think that that could present. So just for those that might be, we put the chart up on the screen, but for those that might be listening and not watching, I mean, this chart, 10-week near-term focused participation indicator, like you said, it got down to 6%, if I'm looking at that correctly, in April,
Yep.
and moved up to 78%.
Hmm.
Didn't quite hit that 80% level, which is kind of an historic breadth thrust scenario.
Yeah.
But and then it just consolidated between 60 and 80, kind of chopping back and forth, which is normal to
Yeah.
see you see a big run up in participation and then just some consolidation to
Hmm.
look toward. I think another interesting thing to note, it's a moving average base indicator. So if you go back 10 weeks, essentially 70 days from today, we're right at the end of May. And so the longer that stuff hangs around at current price levels, you're going to start kicking off a lot of those other
Lower prices.
lower prices, which are going to inherently make this indicator move lower,
Yeah.
right? So it doesn't necessarily mean this moving lower doesn't mean impending doom for the
No,
market.
no,
It
not
it
by any
it
means.
it can if it moves lower really quick, right? If we've seen that,
Yeah,
or if we see a big divergence.
yeah,
Chuck's talked about that.
yeah.
We talked about that a little bit actually last week's podcast. But right now it's more of just like, hey, maybe like a I don't even know if I'd say a yellow light, like a half green, half yellow. Like
Yeah, yeah. Like, let's not go pedal to the metal here.
right, right.
But yeah,
It could open some opportunities though, things buying on a pullback.
yeah.
That could, especially things that have gotten pretty frothy. Um, but definitely one to monitor. If you see it move significantly lower, I mean, moving below that kind of 40 point would be the next line that I would look toward.
Yeah.
If it continues to drop. Um, and then subsequently, if it drops, if we do get a little bit more of a pullback, um, somewhere between like that 5-7% range, and then that thing turns around, that can be a good entry points to look toward.
Oh yeah. I think whenever this thing gets below 20%, I just start. I'm like, okay, where can
You go
I?
triple leverage all the way.
No, no. I'm just like, where do I want to go after this thing reverses back
Right,
up from
right,
this level?
right.
Yeah, yeah,
Okay, that's a good thing about it. I mean, and moving on through the charts, so one area that we've seen, we haven't seen any change recently. We talked about a little like improvement and a back off in participation. I mean, where we've just seen continued movement in the same direction for months on end at this point has been the dollar.
yeah.
I mean, the dollar topped out at 110 back in January, moved to a sell signal in January, and has just moved steadily, consistently lower since. You've gotten, I mean, a series of lower highs repeatedly throughout that time. It hasn't even formed a double top
Nope.
since January, which is kind of wild.
Yeah.
Um, and it's sitting down, reverse down, back down into a column of those, down at the 98.50 mark.
Hmm.
Um, I mean, it's a pretty weak looking. If you cover up the name and just look at this, it's like that is a clearly defined negative trend that's moving
I
lower.
mean, you had like a. I mean, if you wanted to put this in a textbook, you get that bearish triangle pattern in May, and the bottom just kind of falls out. Now we've kind of retraced that move, reversed back down yesterday. What I'm watching out for this chart is obviously if this thing continues to move down, international equities are going to have a pretty nice tailwind, which they aren't as competitive with the core of the US market as they were 4 or 5 months ago. But they're still a good place to be as long as you get the right exposure in international equities. And then just from the price action on the dollar, be looking around this 101. That was like kind of the old support over the last few years. We're trading below that now. The dollar can get back above that. I do think it kind of leaves some room for it to continue to push higher.
Hmm.
Until that happens, though, it's pretty clear the path of least resistance is lower on this one.
Yeah, yeah, I think that's a good summary. There are some pretty big gaps in there historically above that one at one point.
Hmm.
That didn't really leave a lot of overhead resistance from there.
Yeah.
Um, and so then, I mean, in looking at other areas, looking at the dollar, looking at charts that have shown a lack of movement, maybe up until the past couple days. I mean, the final one maybe we can end on is Apple, AAPL. This was the I mean, people were leaving it out. It's like the Mag 6 without, or was it went down to 5, take
Yeah.
out Apple and Tesla. And all of a sudden, Apple has slowly but surely also not put in a higher a is not put in a lower low. It's made a series of higher lows since April.
Yeah.
It's seen a lot of consolidation throughout May and June when a lot of other charts were continuing to move higher. It moved
Hmm.
sideways, but didn't move lower. I think that's an important point to note.
Yeah.
Moved back to a positive trend at the beginning of July and is now, with today's action, giving a third consecutive buy signal. I mean, if
Yeah.
you listen to all the news about it, I would not have thought that Apple would have been on three consecutive buys.
Yeah. I mean, I remember looking at this the other day and it was down like 20% year to date. So I'm sure people were pulling up that chart or, at least from a news cycle standpoint, they could say, oh yeah, Apple's still down 20% this year.
And it's
Don't,
down 14. Not great.
not great, but over the last few months, it's definitely looked quite a bit better than it did. And it got hit pretty hard from the tariff stuff just because a lot of its manufacturing's offshore for iPhones and everything like that. They've seemed to kind of adjust that. Tim Cook was at the White House yesterday. So I imagine there's some deals being made there. But, you know, pretty good picture, pretty good break. Now, if The one thing I could say about this is if we don't kind of stay above this 212 to 220 level moving forward, it looks like a pretty bad break above and fail a big resistance area. That's kind of the one negative thing I could say. But that's an if. That's not actually happening right now that we see on the chart.
Yeah, I mean, breaking above that, staying above 220 would definitely be a an important point to note. I mean, I would say though is that like Apple's still down 14% year to date.
Yeah,
There's a lot of support baked in there, pretty close by.
yeah,
And so you
100%.
from like a risk reward standpoint, look for those that might be looking to, it's a little bit overbought with today's move, just given the lack of movement we've seen over the course of the
Yeah.
past several weeks. But it could be a pretty interesting area to look toward if we do get some for like continued upside action.
Yeah, I mean, I think above that 220, you're looking at going up and filling up to 240, 244 there, where it really broke down in March.
Yeah, and you got some consolidated resistance from that 244, 248, and then up at the all-time highs at 260.
Yeah.
But it's not a bad. If you just cover up the name, look at them like that's a pretty good trend break. You got two consecutive buys after with that trend break,
Hmm.
um, with it in a positive trend and a lot of steady support in that 190 to 196 now 208 that
Yeah.
range. There's a lot of support baked in there, so could
Yeah,
be a pretty interesting name to look toward.
I agree. I agree.
Cool. You want to run through the rest of the Mag 6 too? Or
Eh.
we'll leave that for next week's
We
pod.
don't want to bore everybody.
Yeah, there we go. Well, I mean, I know it's the start of August, kind of the dog day of the summer. I think, like Miles said in his report piece yesterday, I think it was.
Mhm.
But there's still some price action going on out there, and I think it's still important to stay attuned, set the alerts, and keep an eye on what's going on.
For sure. I mean, it looks like we're going to have a rate cut in September. So,
Now that you said it, you jinxed it. That'll change
yeah,
things.
how much we've talked about rate cuts over the last few years, and that didn't
Gosh.
happen.
Yeah.
Yeah.
We what, 7? We're supposed to be in the cards for 2025?
Was it 2025 or 2024?
Probably 2024 as
I
well.
mean, I remember they were projecting rate cuts in like 2023,
Yeah.
and then we didn't get any.
Yeah, it'll be interesting. But what we do know for sure is going to be happening this year is our Catapult conference coming up in
Yeah,
October.
yeah.
To pivot the conversation completely there as we wrap up, Catapult is our flagship conference taking place in Nashville. There's registration information available on the research platform, so
Mhm.
dorseyright.nasdaq.com. You'll see a nice little video that includes some slow-mo shots of Joseph walking down the hallway.
Yeah,
But make sure you register if you're looking to come and haven't registered yet. Our early bird pricing, discounted pricing ends next Friday the 15th. So register before then. Go ahead and lock in your trip to Nashville to talk about more charts.
yeah, yeah. Enjoy our plug on our own podcast, which I think is perfectly acceptable.
Oh yeah, you can plug whatever on that point. Cool. So I think with that, probably wraps us for this week. Thomas, thanks for hopping on here
Yeah,
on
good to be
Thursday.
here.
Thanks everyone for tuning in this week, and we'll be back next week.